Good morning, everyone. How's everyone doing today? Da, 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 da. All right. What's up, Doc? All right. So I can see everyone can clearly see that the gap was filled on Dow Jones, on ES, and on Nasdaq. So today I'm still long biased on the markets. I am looking for a possible retracement on NQ, maybe close to 15,129 for a long, which means I'd also be looking for a long on ES and Dow Jones. Let's take a look. I see that Tesla ended up going to the over 260 yesterday, which was what I was expecting it to do by today, which it did yesterday. So anyone that took that Tesla 255 calls banked. Let's go with Nvidia. Nvidia, same thing. So Nvidia's looking like it should continue higher. If we go to a 4-hour time frame, yeah, I like Nvidia for like over 463 today. So we're looking at a nice 10-point movement. Apple looking good as well. It's still funny to me how they downgraded Apple, but Apple is still increasing in value. Meta then broke out over 306. Beautiful. Should continue higher. Microsoft, same thing. AMD. Don't really care for Netflix, but Netflix is off the bottom. Amazon. So yeah, so again today I'm looking for continuation. Yeah, I'm looking for longs. I do want to see a possible retest of 130 for a long. Oil, I don't think oil is gonna fill the gap anytime soon. Um, with this conflict in Israel and they're talking about how Iran was involved in orchestrating this whole attack. I don't see oil filling this gap right now. And if the US really gets involved and they go, or even if Israel goes after Iran and they're talking about bombing some of their oil refineries, that's gonna send, I mean, we're gonna see a nice 10, 15 point gap up on oil. So I don't want to short oil given the situation that's going abroad, because if something happens while we're sleeping and they attack, oil refinery, or let's say if Saudis get involved in some way, shape, or form, it's going to massively disrupt oil productions. So I don't want to short oil. If oil does come down and fill the gap, I'm buying. If oil continues to push, I'm a buyer in oil. So, and it's unfortunate what's going on, but if things do escalate, as I was saying early in the year, we could see oil over $100 before the end of the year. And right now, the way things are looking, it might, cause uh, I can't even speak on these conflicts, but yeah, it's not looking good. So we'll see, especially since you have these politicians all screaming war. Oh, let America go after Iran, and because Israel got attacked, that's America was attacked. It's like, no, Israel was attacked. Israel is not America. They're just they're aligned. They're allies. So just be cautious if you want to trade oil. I'm personally not touching it. If anything, I'm just taking longs. I'm not taking any shorts. And anywhere I take a long, I'm keeping about a 30-40 cent stop loss. So somewhere between four or $800 is what I'll be risking per trade on oil. If I'm wrong, I'm wrong. It's okay. Look elsewhere. But yeah, so today for the open, I'm looking for a nice pullback to get long. As I stated, this conflict initially it was negative, right? But once the market digests the news, it was gonna come out to like this is going to provide an opportunity for a lot of companies to make money. So as I mentioned, defense companies, companies that produce products for offensive military products, defensive products, we're all going to increase in value. Dun, dun, dun. Good morning, good morning. What's up, charting queen?
Order filled.
Slight pullback for a continuation up. Yes. Yes. I'm looking for a slight pullback for then a continuation to the upside. Let's see. So if we get a pullback 30 minutes, let's see. Okay. So okay. Uh 4 minutes to go. So I'd be looking for a pullback either to 115, 130 or down to like 1590, 1580. So probably from here we're looking at about maybe almost a possible 90, 80 point pullback. So we'll see. Yeah, let's just wait for the open. We want better confirmation. I do like that RSI and stochastic are resetting. But like I said, I definitely want to see some sort of a pullback down to 15 130, maybe 1590 for a long. So we just gotta be patient, no need to rush it. The deeper it pulls back, the better. Um, and just a reminder, guys, we have CPI on Thursday. Not necessarily. I mean, we had a really good movement yesterday, right? I mean, a bit of consolidation yesterday, but we broke out towards the end of the day. Beautiful. If we do the same thing today, I mean, you just already know. If we get a lot of consolidation during the morning, jump off, come back around 2:30, smack a couple of trades and call it a day. Well, let's see. Less than 3 minutes to go. Oh, yesterday. Yes, it was. Yes, I did. You know how I do, man. I be printing while I be sleeping. All right. 2 minutes to go. 2 minutes to the fireworks. I wonder if she's just gonna push right out the gate.
In real yields may reflect investors' assessment that the underlying momentum of the economy is stronger than previously recognized. And as a result, a restrictive stance of monetary policy may be needed for longer than previously thought in order to return inflation to 2%.
That's Fed Vice Chair Jefferson yesterday talking about longer term,
Tired out, we
higher
are.
for longer. Actually, Sheila Bair has an interesting essay in the FT arguing that you kind of want a period where money costs something, because otherwise you end up with huge inefficiencies, zombie companies.
Awesome, bro. That's what I'm talking about. Yeah, buddy.
Or take over companies.
Okay, okay. Here we go. Less than 10 seconds. Less than 10 seconds. What are we about to have?
Doing things right now which make it so that if failing,
Okay.
FTC will block it.
Nice
So what you have is
pop.
this kind of
Are we gonna continue?
whale's not swallowing the guppy, and the guppy stays alive. So you do have zombie companies. I think that is a lot of it's because
She
they have
pushing. She pushing.
I mean, I talked to a lot of people
Taking along small micro.
Because they know, even though Microsoft was able to buy Activision Blizzard, they're afraid to be able to make a deal without thinking, well, we're going to look like fools.
We're still getting some M&A announcements. Who knows if we would be getting more otherwise?
Nope. Okay, well, good thing it's just a micro. Wait for it.
Doing things that are deceitful. He's the CEO. The easy way is
That marks a turn in the M&A landscape. Let's get the opening bell here. The CNBC Real-Time Exchange. The big board commercial real estate broker home to
back.
celebrating its 10th listing anniversary at the NASDAQ entertainment company Falcons Beyond Global, celebrating its recent listing as we're trying to maybe target 43.50 now.
yeah, I mean, PepsiCo's up so much that there's a belief, I
Come on,
think,
baby.
that there could be other PepsiCo's lurking, and I think that's right. The group has just been tarred and feathered as if the sales are going to drop off the
Nice.
cliff. And it's very hard to refute a 2024 forecast for PepsiCo. Why bother to give it if you're worried?
Are you bracing
Come on.
for Delta, BlackRock, JPM, Wells?
Yeah, I am. I mean, I think that I'm doing a piece tonight about how one of the reasons why people don't like the market is because all you do
Orders
is
filled.
cuts for the banks. And we're all used to seeing BlackRock being leader and JP Morgan being leader, and they're just not. And what I worry about is that they keep setting the darn tone. They come first. They don't really
Yeah,
give
why
you
is this
anything
thing
that is
frozen?
positive. And you end up thinking, okay, I guess it's not going to be good earnings season. And it happens Friday, and it's weird. It's kind of like a baseball game, a series. Like, you go in, and if you lose the first one, you're really that's bad. It's a 3-game series, and now this is a 5-game series. I mean, City has been here for so long. Your head is spinning. Bank of America is so slow.
I was going to ask you about these reports yesterday that their treasury holdings are starting to cause finger pointing within the bank, according to some reporting.
Look, I just know that I don't understand the City's tangible book value versus where it's selling. It's about half of it. Now, somebody, I mean, what's amazing is that someone from the Fed doesn't say, you know what, I want to look and see if this isn't CalFed, GlenFed. Now, this is much better on bank than those, but those were savings and loans that were selling, saying book value,
Damn.
book is 50, and the stock was like 30. And then, of course, stock was zero. Now, City's not going to
Ugly.
happen.
Yeah, so
But there
far,
is
so
this
far,
discrepancy
but
between book value and
so I
stock.
entered at
They can't be reconciled just looking at the net financials.
15206
So you do want to know why it's so different versus all the other banks.
with the micros. Let's see if we break above the highs, I'll add a mini.
And I just said, look, I've been so depressed about Truist because I think it's such a good bank. But you know what? Let's see what happens. I'm depressed about Huntington Bank. That's a good one. But I like being wrong immediately on Truist. We need to see. Somebody actually came up with a positive note on science today. I mean, geez, that's supposed to be like in the event. They have an envelope that says an event of nuclear war openness and says science should be bought.
Zions is up 2.5. U.S. Bancorp, fifth, third, key, Jim.
U.S. Bancorp's another one.
Is this, this is all just a
for now.
from the Fed speak in the last 24 hours?
So
Damn.
look, you know that
I mean, ES is looking pretty solid.
So-called wrong bonds, but nobody is saying you have to redeem them. But it doesn't matter in the end. What they have to talk about, credit issues, not making so much money on net interest margin. The whole dialogue's bad. So enjoy it while it lasts. How about that?
Yeah. I know the ECB did put out a bulletin warning about
Completely
CRE
forgot to
risks again.
let him know I'm
And there's
live.
ongoing discussion about what breaks, depending on how rates stay high for how long.
The CRE risk, I think, is with the insurers. I mean, the banks lay out everything CRE, and you just don't have anything that really says, wow, they really screwed up. The insurance companies do not lay everything out. And that seems to be where a lot of the problems are. I think that I would avoid those stocks like the plague. I told people who call in that those are not to be trusted because we don't know what they are.
Yes,
Kind of
yes,
the inverse of
yes.
yesterday's action in that all sectors are green except pretty much for energy.
Oh.
Do you believe energy's topped out here? Despite what we know is going on in the Middle East?
I think that I'm waiting for Pioneer.
Okay.
I mean, remember the Wall Street Journal had a piece saying the Pioneer's going to get a bid. Now, remember, on April 27th, Scott Sheffield told me there's no talks, no desire to sell. But the Journal continues to tell us that they're going to sell. I find it's perilous for the Journal to be this wrong twice. So I'm betting that once something, they should be a little more shy.
Let's take a look.
There are things happening in the world.
Yes, yeah, just about. I'm really not liking. It's really dragging right now. Okay, go back. I'm gonna create some alerts in case I'm looking at another chart and price gets below.
Which is Raytheon Technologies.
You mentioned this yesterday.
Yeah, that seems to be desperately trying to put it in because of the engine problems that they have. I do think that LHX is another one. They bought Aerojet, and Aerojet is how you propel a missile. So I'm waiting for Oshkosh, nothing there. I met with them last week, but I do think that if this is like 1973, and Israel's much less dire now. Israel back then, Nixon and Kissinger got together and said, okay, listen, 36-hour resupply of everything they need. Save them in the Golan Heights, save them in this side of Egypt. That's not what's going to happen.
Yeah. Kirby, I know, was on some of the cable networks this morning saying that the first tranche of supplies for the U.S. is now en route, and they're obviously going to be requesting more. And I said, we'll hear from the president this afternoon.
Well, I know it doesn't have enough. Apparently doesn't have enough. And that would be RTS.
Right. Among some of the laggards today, Jim, include some tech names, Qorvo, Skyworks, we hit with a downgrade.
Well, I mean, look, I think it's a little late in that game, and they're citing on Chinese. There's also a note about PCs by Bernstein, Tony Sacconaghi.
One of your favorites.
I didn't say anything. PC market data, we passed the bottom, but we ain't roaring back. Well, he finds the lead lining? What does he find? The radioactive lining? Good. I'm curing it, become a hero.
Juniper's in there as well. JP Morgan goes to neutral 29.
Yeah, I know. I tried to buy service now. That's ridiculous that that's down. They got good AI.
Just learn. Good, yes.
What the heck is that? Real income is down here.
Fairly constructive call
Breaking
though on
out.
EA today. BofA goes to buy.
Are we gonna get over or not?
5-year trough valuations.
I thought that was a very interesting note. I didn't know that they got some contracts that are up. It looks like they're going to get them, and I thought that was very positive. I think the gaming business is very, very good, and it's taken a turn for the better. I like Take-Two very much. Now, the one that is really interesting is Unity.
She about to go or not?
John Riccatello gone, stock is acting well. Now, is it acting well because Riccatello's gone? Harsh judgment. The man who's come in, who's the interim CEO,
Order filled.
is Jim Whitehurst. Now, Jim Whitehurst is always a big favorite of Mad Money. He sold Red Hat. He worked at Delta beforehand. Now, Unity effective immediately does not sound like. They didn't even give you the spend time with family. You got to give them the spend time with family.
Right. More time with
The FCC gives you that. You're in trouble with the FCC. They let you say time with family. Why not?
Is this really
Tuscany. I don't know.
Is this about some kind of controversial price hike?
I don't know. I like Riccatello very much. I think he's a great.
That was me getting out of NQ. I'm out of NQ. I'm gonna wait. This price action is just horrendous. Yo, yeah, buddy. What's up? What's up? We working on it, bro. We working on it. Just waiting. Waiting for this choppiness to break either to the downside or to the upside. CPI this week, so we're probably just gonna get this whole back and forth, back and forth.
Microsoft, Activision, Amgen.
Yeah, right. But what's crazy, it's only been about 9 minutes since the open, so definitely would have liked a bigger move by now.
People to buy the ones that are overlap, but both the Justice and the FTC has said over and over again, you can't cure overlap, and that's because they're reacting to the botched Safeway.
Yes, it does.
Put some stores with Apple Hagen, and then they were bankrupt in a few months.
Palantir, new Army contract worth about $250 million. That's going to be the highest since August.
So they're before the stock was rolling. I have to like Palantir very much.
Exactly.
I looked into the CFO.
So I'm sitting on my hands until then. If y'all got questions, feel free. Dow Jones is pulling back quite a bit, so ES and NASDAQ should be following shortly.
Speaking of Musk, Jeffries today cuts Tesla. They were at 265. They go to 250. They actually question whether or not their pricing advantage is ephemeral or somehow longer lasting.
How are they taking him? I mean, I think he'll come up with whatever. He's a by any means necessary guy, and I think that betting against him and all these price cuts. I mean, he's a share taker. Right now, he has to wipe out Ford and GM. It's existential for Ford and GM because he figures out what's the price and he just says, "Listen, I can take them
Looking
down."
for long or short today.
And he's a capitalist. I think he feels bad for them.
On gold, I'm not interested in touching gold, at least for a short. On Dow Jones, ES, NASDAQ, I'm looking for longs. I want to see if we can get a retracement somewhere to 15,130 or 1590 for a long.
That sounds good. By the way, Honeywell's
But
down.
we shall see.
I think people expected more. I think that give me a break. What are you supposed to do?
Yeah, I'm looking for longs today.
There's a lot of stuff going on where I think that
I don't really want to short because the market structure has shifted to the upside. So it doesn't make sense in looking to take little quick short scalps when the bigger movement is to the upside.
Christmas in October.
It is, and I think that TJX they like low price because inflation's raging.
So 260
Deckers Plus,
by
yeah,
today.
very bad. But I think what's most important, let's cut to the chase. Are people worried about green? Now, okay, so let's look at sweating. Carbon footprint. Do you pay attention to your carbon footprint? 16% say yes. 51% no. 33%. What is a carbon footprint?
Here goes
There's a lot
Nas.
there, this year. I noticed number one.
Okay, it's looking like Nasdaq is about to break out.
Number one restaurant brand, Chick-fil-A. Number one cosmetic brand,
It's a value play.
number one e-com brand, Amazon.
Right, and I think that's great. Number one favorite celebrity is so easy, it's not even a game.
Really? Is it?
Well,
I think it is.
It's like a hit.
The 15180 is holding pretty good.
Sandler,
Are we gonna break
out?
out?
All day. I thought that might be an interesting stock, but it turns out to be Armco. Was bought a long time ago. This is so much fun. I'm depressed that Ryan Reynolds is forced since he's my fave.
Ever since he came in,
Okay.
Just a
you
laptop.
guys have been friends.
I'm a lapdog. But I do think that you should take notice that TJX, Burlington, and Ross are incredibly strong. And that off price does say something. This is a group that I think traditionally has not been all that sensitive to price. And there is just a real fear of inflation because it bites people. Bites people at the supermarket. Honeywell's down $1.80 now. Well, isn't that just horrible? I do think that when I look at dollar stores, I am very suspect of dollar stores because the sizes I don't think are as good. People should just try to join Costco if they can afford it. Just shop at Costco.
LMC on SPY. Yeah, definitely needs to get out of this range.
Costco's not that valuable.
There's a ton of news. Jim,
Dow Jones is still pulling. Dow Jones is about to go green to red.
going to resume mediated talks with their LNG unions. Culinary workers are going to strike in Vegas, or picket at least. Of course, GM facing now some roadblocks and negotiations with the Canadian labor union, Unifor. And then, of course, we're watching UAW and the Big Three.
Look, all of these are negative. I mean, when you have just outright labor strife, it puts you in another era. And you don't want to go back to 73, 74. You don't want to go back to 1950, where the unions were really big. I mean, it almost seems like every area where there is a union is a problem. I am waiting, and I don't know anything about this, not yet, but like the machinists usually throw in a wrench right now. They have not. I am concerned that the supermarket people, that could be another one, any big union seems to look at the other unions and just says, listen, we have to do something.
That's certainly what the UAW says happened at MAC. And then B of A's got a chart today. 420,000 workers have struck this year.
That's incredible.
If the UAW expands, that goes to 545. That would be a 40-year.
That's amazing. I mean, when you speak to Rodney McMullen, who runs Kroger, he said, look, we're going to be if you merge the two, Alpha, you're going to have the best union shop, and he's very, I would say, supportive of the union. Jim Farley was supportive of the union at Ford, but this has been one of those moments where a lot of people want to play catch up to the inflation, and I don't blame any organization. It's just stuff with the same contract. When inflation makes it so when you go to the supermarket, it's ridiculous.
We are going to hear from the MGM CEO, I believe, in the 10 a.m. hour. But overall, I mean, casinos obviously have the travel.
ES getting closer and closer.
We do our club talk, and we have this very cheap stock.
Seems
the
to
stimulus
down.
actually hit stimulus over there, stimulants. Yeah, stimulus. Just let's send in carbon. Let's send in Celsius. There's some stimulus.
I'm glad you mentioned China because
Dow Jones is bouncing.
sovereign debt sales, infrastructure stimulus.
Jesus.
People in China are pessimistic.
Literally almost 30 minutes just in this range on NQ.
Look at, the hope. You don't see a lot of people.
Come on, are we gonna break out or not? We need to see NQ break above 15 to 39.
It seems that this axis of evil is developing to just quote again. Yep, Russia, you have Iran, you China, and these are not allies.
That was Tudor Jones' whole point. His words were that you've got these nuclear powers being run by socialists.
Absolutely the best. Yeah, I mean, that was unbelievable.
Or a pullback down to 1590 or 15130.
Yeah, you can say, listen, it doesn't matter. You can never find anything. I can find things on the tape at any given moment that seem to be incorrect. And I came out yesterday and said on my one of the I do a home stretch and I do the morning meeting.
Or do
Pepsi strikes back. That's just what they're going to do.
both all three indices they run together. It's just it's a rotation between which one is the leader. There are moments throughout the weeks and months where the leader is NASDAQ. There's moments when ES is the leader, and there's moments when the Dow Jones is the leader. And essentially what that means is sometimes the Dow Jones will be the one that runs the highs and continues moving higher. And then the lagger is either the NASDAQ or the lagger is either ES. And there are moments where NASDAQ is the leader, where it's breaking out or breaking down first, and then ES will follow, and then the Dow Jones will follow. The divergence this morning is that the Dow Jones is the one that's actually dropped the most out of the three, which is kind of giving me an indication that, okay, maybe, we're really going to get that pullback that I'm looking for. So the best way for you to identify that is you want to have all three of them open at the same time that you can see them simultaneously and have them on the same time frame. So if you're looking at on the 15-minute time frame, you're going to have every single one on the 15-minute time frame, and you're going to see one drops first, right? Or one will run up the high to take out the highs and continue moving higher, which is why a lot of times you guys hear me like, okay, NASDAQ and ES have both gone from red to green. If they both have gone from red to green, which one's the laggard? The Dow Jones, right? So NASDAQ might be up like 40 points in positive territory, while Dow Jones is negative 40 points. So I will take a long on the Dow Jones because I know it's going to catch up to the to NASDAQ and ES and go positive on the day. And it becomes a relatively easy trade for me. So they all follow suit. The only times I've seen NASDAQ be in the positive while ES and Dow was slightly red was when NVIDIA's earnings happened and NVIDIA doubled their market cap in that one earnings. Okay. ES picking up. Looking good. So come on, bro. Pick a direction already. Jeez. Oh, I know. It'd be like that. It'd be like that. We just gotta be patient and wait. Okay, okay, all right. We're looking better. ES is breaking out. Okay, let's try this. I'm gonna try a buy.
Order filled.
I'm in a long at 15 to 18 with the micros just because I don't trust it completely yet. If we break above the morning's highs, then I will add a mini, and look at that pullback. Good thing it's just a micro.
Order filled.
Exiting out. I'm just not liking this action. Small loss. Nice, nice.
Stocks opening with some modest gains here, back to 43.46 on the S&P, down almost 50 points ahead of a very, very busy session as Q3 earnings heat up and the Fed's week continues. Don't go away.
Finally breaking. Come on.
See, what I look at is that this stock was at 200 in March of 2021. It's now at 84. And I think that Nelson Peltz correctly noticed that the stock's down huge and that's probably not right. Now, the idea that it might be Iger, that it might be cheap, it doesn't matter. The fact that the stock's down really big tends to say, if we were in anything else, to say we're in sports. What have you done for me lately? Well, absolutely nothing.
Okay, we're
So I know
pushing.
that there's blowback whenever you say, hey, listen, there's, this stock's awful.
Okay, we're about to.
At least we got yesterday, and then they're going to meet again tomorrow. We got another joint statement. People take that constructively.
Yeah, I mean, it's just that I think that I understand when you see a stock down that much, you buy it. You want to know what's wrong. I think it's not something.
How about tonight?
All right, I've got CarMax. They rarely do TV. I think it's very important. This is used cars. And then I've got Damon John, who from Shark Tank, who's just invested in a lot of companies and has great vision at all times. Kept me in Apple, by the way, it was at 30. Not bad.
Great backstory.
Yep.
Okay, we're looking better. Looking better.
We come back in exclusive with the CEO of MGM.
What's up? What's up?
Since the company suffered that cyber attack last month.
Yeah, super, super slow. Ugh, this is dragging our teeth. Are you kidding me? Okay, highs was taken out. Very, very, very nice. Okay, okay. Okay, we chose a direction. We chose a direction. Are we going to continue? Mm-hmm. All right, nice pop to 15.
Good Tuesday morning. Welcome to another hour.
Well, let's see.
Stock Exchange. Sarah Eisen is on assignment. David Faber is off today, trying to sustain the bounce from Monday. Early session highs here, back above 43.50, trying to balance the headlines from Israel, along with some constructive Fed speak talking about the impact of higher rates.
So many cross currents on this Tuesday morning. We're 30 minutes into the trading session. Here are three big movers we're watching. Pepsi on the move after beating estimates and raising its full year outlook. The company's CFO telling CNBC they haven't seen any impact from weight loss drugs on sales at this time. Shares up about 1.1% right now. Palantir getting a boost. The U.S. Army signing a $250 million contract with the company to test and develop AI and machine learning capabilities through 2026. Those shares up 2.3%. And we'll end on shares of Honeywell. A reorganization of its businesses into three segments, adding it expects, quote, strong third quarter sales. When it reports later this month, those shares down about 0.3% right now.
All right, wholesale inventories out just moments ago. Rick Santelli has the numbers. Hi, Rick.
Hi, these are August finals, so minus 0.1% remains at minus 0.1%. And do keep in mind, every read this year, Mike, has been negative except for February, which was 0. No positive integers. You have to go all the way back to November of last year to find a positive integer. If we look at trade sales, up 1.8, multiples of 0.4, and in the rearview mirror, 0.8 now becomes 1.2. 1.8 equals June of 22. You have to go to March of last year to find a higher number that was up 2.1%. So sales definitely zooming. We see interest rates are a bit lower after yesterday's closure at 498. We're down 10 basis points in twos, and at 468, we are down a dozen in tens. The lowest intraday trade since the 2nd of October. Harold, back to you.
Rick, thanks very much. Rick Santelli. It's obviously a volatile market for investors this week. This is billionaire investor Paul Tudor Jones talking about it earlier this morning on Squawk Box.
Really challenging time to want to be an equity investor in U.S. stocks right now. It's really hard because, again, you've got the geopolitical uncertainty, which we, I think, come to live with to a certain extent. But again, all those have the ability to have a non-linear outcome.
Meantime, earnings season kicks off this week, as you know, and our next guest says earnings revisions suggest the profit outlook has stabilized. Goldman Sachs chief U.S. equity strategist David Kostin, with his target of 4,500, is here at Post 9. David, it's good to have you back.
Oh, I see.
Are you looking forward to earnings season? Is it in a good way?
Well, we saw Pepsi this morning, so it was a good augur for the upcoming season. The idea of expectations coming in for the quarter actually been the best we've seen since the fourth quarter last year. Meaning, as you were coming into the second quarter, you saw analysts cutting estimates pretty significantly as the quarter earnings season reporting dates began.
Damn.
Here we've not seen that, and actually earnings have been pretty resilient. So I think that's a positive development, number one. And number two, this is the first time we've seen expectations that are not year-over-year decline in earnings. So that's both the revisions as well as the year-over-year change. So we're looking for basically flat earnings for the year, year-over-year from the third quarter versus a year ago. Margins declining slightly, sales up 2%, margins down a little bit, and you basically have no earnings growth. But if we take out energy, then you've got earnings that are going to be up low single digits. So that's a generally positive story. Remember, for the first time in a year, we're really going to see positive EPS growth.
There's been such concentration, though, in the S&P 500, and I know you note in your note that that could pose a risk to the aggregate index just because consensus has the 7 largest names contributing even more to S&P earnings in 2025, even than they do today, and it's still such a large proportion. So what might it mean if there is a miss at one of the 7 largest tech names?
Still holding. Oil is still holding these higher lows. Again, I'm not particularly interested in shorting oil just because at any given moment news can come out and cause it to spike, and I don't want to get caught in that because sometimes if the volatility is too much, your stop loss won't hit. So I will skip that.
Expectations coming in for those largest companies are actually pretty optimistic as it kind of rolls out. We won't see some of them until the early couple days of November, so you still have another month to go. This week, it's all about the end of the week, of course, the financial stocks will be reporting, and I think the narrative and the thought process in our discussions with portfolio managers tends to be around higher for longer, which companies have strongest balance sheets, and more particularly less exposure to interest expense. That's really, I think, an aspect of portfolio management that's really driving a lot of conversations right now.
Yeah, David.
Oh, for a long, yeah, I'm more long bias on oil than I am short bias. It may take several months for oil to fill that gap.
Margins can't stay up here, can they? I mean, that seems to be that sort of gut reaction that people have. Labor costs going up in some areas, but then you also have these huge growth stocks, massively profitable, that have a huge influence on the index. So where is really the trend of margins going into next year?
The margins at best are flat.
Okay.
That's the best story. The best I can offer you is a flat story. You've got higher labor costs, you have higher interest expense, you have higher energy prices in particular. They're going to be headwinds for a lot of companies.
Okay, Dow.
Some of the conversations that we've had with some of the companies worrying about 2024, and we recently rolled out earnings estimates.
Taking along on the Dow Jones.
This year, around $224. Mike, we've been flat all year long at 224.
Stop loss 50 points from entry.
Around this level. It's number one. Then you got $237 for next year. It's up around 5%, and $250 if you look all the way out into 2025. So that's the general trajectory of how earnings are going. The market probably follows along that trajectory as well. Rates are higher, more expensive. Cash is pretty attractive. All the money is going into, not all, but a lot of the money going into money market mutual funds, for example. Not really seeing big net inflows into equity so far this year.
David, of course, then there's the geopolitical question. We want to get the latest on the conflict in Israel this morning. Ralph Sanchez with the NBC News has been dealing with, I think, some air sirens for most of the morning. He's been in front of the camera and away from it. We'll get to him when we can. I know you can't talk about geopolitics specifically, David, but has the environment changed here for the duration or not?
Well, obviously, it's a tragedy from a human point of view, but the idea fundamentally will be getting earnings for the last 3 months, which is obviously backward looking, and the prospects looking forward are probably more domestically facing issues that are sort of pertinent to a lot of portfolio managers. Higher oil prices is a concern. Oil prices are already up a lot versus a year ago, so less likely to have a big impact on a sustainable basis.
What does it mean for just the overall risk on sentiment, for investors? Because you've got this, and Paul Tudor Jones was also talking about just the overall state of, our fiscal house here in the U.S. and just all of these uncertainties as they pile together. Does it start to really have an impact on investor sentiment that could cause them to maybe ignore some of the fundamentals, or at least involving consensus and earnings and things like that?
Well, I know Paul well. I think he's very prescient in terms of the way he describes some of the challenges that you see. Risk premium-wise, it already looks like the market is expanding. Market is earnings is so much more important. Rates are high. Rates are going to stay at these levels, maybe a little bit higher until the early part of next year, which is a sort of impediment, if you will, to a higher PE expansion, multiple expansion, which means it's going to come down to the fundamentals, which is sales and margins in the economy. Don't have a recession in the forecast. Expectations are the economy continues to grow at a decelerating rate. Inflation is coming lower. So those are sort of positive developments, but cash is yielding, 5%. That's pretty attractive in this environment.
Although you guys are still year-end target on the 10-year is 4.3.
4.3 coming down towards the end of the year, but think about the S&P 500. We're basically around 4,500, so a little bit upside from now to the end of the year. 4,700 middle of next year, so kind of 8% or so upside for the next 9 months, which is modest return, not great return, not terrible return. It's sort of trend like market.
Right. David, thanks. A lot to get to today. Appreciate it.
I see you. Thank you.
David Cost.
Thank you. As we head to break, here's our roadmap for the rest of the hour. Shoe company Birkenstock set to price shares in just a few hours. What's at stake for the IPO market?
Plus, the CEO of MGM Resorts joins us. His outlook for the company following that cyber attack, which cost the company around $100 million.
And smells like teen spirit. Piper Sandler out with its latest pulse of Gen Z consumers. Talk about where they're shopping, what they're buying, some of their favorite brands. Some of these results might surprise you. We'll get to it when Squawk of the Street comes back.
Damn, ES just gonzo. Okay, taking some profits on the Dow Jones long. Let's go.
Welcome back to Squawk on the Street. Oil prices in flux as Israel and Hamas conflict triggers supply concerns just as WTI crude comes off its best day since April. Joining us now is Ed Morse, Citi Research Global Commodity Strategy Head. And it's good to have you here. Yesterday, we got that reflex bid into crude oil up about 4%, although it only brought prices back to where they had been maybe a week earlier. So how does the supply-demand dynamic change, if at all, with what's going on in Israel?
So actually, the price dynamic hasn't changed. There's also all sorts of scenario possibilities of how it might change, but we haven't seen them unfolding, and it really is a function of, how much this battle is going to be constrained geographically and how much it might spread. So, there are a couple of constraints on the horizon that people think about, but as we saw in the price action, it really wasn't embedded in any kind of risk that the market was looking at. One of them is the story of the Wall Street Journal of a week ago that the Saudis were prepared to lower the price if they get the combination of a deal with Israel and a nuclear deal with the United States. It doesn't look like that's going to happen anytime soon. So that's something that might have happened by the end of the year, and it still might not, but it's not affecting prices today. And the other is, what is the response going to be to Iran if the world decides that Iran was really behind what Hamas was doing? Is the U.S. going to strengthen the sanctions, be a little bit more scrupulous about when to have a blind eye to where Iran might be violating those U.S. sanctions? That's also up in the air. It's a possibility for X months from now.
Oh,
But nothing at the
damn,
moment
look at
is
you,
really changing
ES.
the
Look
structure of
at
the
you,
cost.
baby.
If that's the case, let's say a week ago, prior to these events, what was your expectation for where prices should go from here? Obviously, there was a pretty sharp pullback from the recent highs. We never got to 100 on crude. Where does it leave us?
Well, it leaves us kind of in part at the mercy of financial flows. Financial flows were pretty robust at getting us to the price of $97 Brent. We had a phenomenal increase in that length of managed money from the beginning of the third quarter, where the ratio of longs to shorts was about 2.6 to 1, a very low level historically. By the third week of September, that went up to 13.6 to 1, the highest level since even before the Russia-Ukraine crisis broke out. That was clearly what was driving
We
the
should
upward
keep on
movement
going.
in
Don't
prices.
play.
It came off a lot before the Hamas attacks, and it's still not growing. I think we're looking at a market which is seeing inventories beginning to turn around. They're beginning to grow on a gross basis. We're moving into refinery turnaround season, which should see crude oil inventories building. We're turning into a season with much lower demand than the summer. August is traditionally the peak demand month of the year, and it turns out that we didn't have much of a gasoline season anyway. So, we think that prices were already coming off faster than we had expected them to. We're looking at prices now that we didn't expect
Let's
to be
go,
here
baby.
like the middle of November based on expected
Move.
inventory
Push
build.
it.
So
Push
I'd
it.
say
Push it to
we're
the
in a
limit.
bearish camp now than we might have been had we
Nice. I
considered
see you, Jaffe. Let's go, buddy.
Given all of those probabilities that you're considering and others
Let's
are considering,
go.
are you still in that bearish camp given just the overall risk that is overlaid on top of the overall supply and demand picture that you are seeing? Are you still in that bearish camp?
we're in a bearish camp because you don't turn off supply that's coming into the market with just a small turn. We have a lot more supply than demand. Our expectations are about 1.5 million barrels a day more supply than demand next year. And nothing has changed our view that we're going to be in an oversupplied market. Yeah, there's plenty of wiggle room between growth of supply of 1 million barrels a day less than we're expecting to see. And that would still be a weaker market. So, no, we haven't changed our mind on that. Obviously, this is an unstable, volatile environment, and there are plenty of things that could happen domestically and a country like so far, we think OPEC is going to struggle to keep prices at the level that they want to keep it.
All right, market seeming to reflect some of that. Ed, thanks very much for the time today.
Thanks for having me again. Take care.
Coming up, Birkenstock getting ready to sell stock in its IPO after the bell today and beginning to trade tomorrow. What investors need to know before jumping into that IPO. We're back in a moment. Been without its exogenous challenges. The roadshow was almost thwarted by a government shutdown. And of course, the weekend's attacks in Israel add just another layer of uncertainty into the markets. But I'm told Birkenstock is still forging ahead here. The company traces its roots back nearly 250 years. Only 2 years ago, it was acquired by the private equity firm L. Catterton and the family office of Bernard Arnault, the billionaire founder of LVMH. So pretty quick turnaround for them, but it will be closely watched by private equity and portfolio companies as a barometer for the market's appetite for sponsor-backed deals. There's a huge pipeline for these sponsor-backed IPOs. So if this one goes well, it could usher in a lot of activity if it's indicative of, overall sell-side demand for for these deals?
Yeah, every one of these deals so far has been a somewhat unique either brand or franchise.
Yes.
You know, this little IPO thaw that we've had, and also with a motivated seller. I mean, in every single one of them, it was kind of like it had to be soon, or they hoped for it to be soon. This is, though, a pretty unique brand, and shoe companies have actually done very well if they kind of hit the sort of fashion window. If you look at Deckers, you know, with a couple of its
Damn,
brands,
NQ still going.
on running. I know the Piper Jaffray teen survey today was very hot on Crocs, and some other was Birkenstocks didn't show up. But yeah, I think that it'll be given a little more of a look for that reason. It's not like we're selling jeans.
Right.
You know?
Well, it had the boost from the Barbie movie, and you're right, especially when it comes to fashion IPOs, it has to actually be in style at that very moment in time to hit on a certain hype cycle. So you look at it and you say, okay, they've only held it privately for about 2 years, but clearly they're looking to, reach a certain window where their Birkenstocks are once again in fashion. And I'm told we should see a lot of Birkenstocks here on the NYSE tomorrow.
Yeah, you mentioned the history of the brand going back centuries, but a 20% revenue CAGR for 8 years suggests some kind of reinvention, doesn't it?
It sure does. I mean, profitability is narrowing over the first 9 months of the year, but yeah, 21% growth first 9 months of the year on the top line. It's certainly nothing to shy away from for a brand that's been around longer than the United States has been around. So they've seen their fair share of uncertainties and crises out there. So I think they're ready to forge ahead here.
There was some geopolitics going on in the 1700s, that's for sure. Still ahead, Charles Schwab's bond chief with more on why they see yields peaking here and where you might be able to find some opportunities. Certainly the market reflecting some of that optimism today. Dow at 160, up to 43.62. We're starting to talk about resistance as yields are lower across the curve as well. Don't go anywhere.
Just running, 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 running. Fly, baby, fly. Wow, such a beauty. Gone. 4,400 on ES coming. 4,400 on ES coming.
NBC News update. A Hamas-imposed deadline for residents to leave the Israeli city Ashkelon just passed. The militant group promised attacks after 5 p.m. local time. It came as Israel's military said it regained control of the Gaza border, and after Israel bombarded downtown Gaza City today. The lethal conflict began Saturday after Hamas launched a surprise attack on southern Israel. The violence has claimed more than 900 lives in Israel and nearly 700 in Gaza. Meanwhile, the first wave of U.S. assistance is on its way to Israel, according to National Security Council spokesman John Kirby. Kirby said the U.S. is focusing on making sure the country has the munitions, weapons, and tools it needs to defend itself against Hamas. And an American journalist jailed in Russia lost another appeal this morning to be released after more than 6 months in custody. That means Evan Gershkovich will have to remain in jail at least through the end of November. Russia accuses the Wall Street Journal reporter of espionage. The U.S. government says he's been wrongfully detained. Mike?
Thank you. We're just about an hour into the trading day. Stocks are higher as Treasury yields fall. Let's get to Bob Pisani. Bob, S&P almost at a three-week high here.
Yes, and we're working off oversold conditions. We're up about 3% since the close on Thursday. Just take a look at the sectors. This is this tilt towards the cyclical end of the market that we were talking about that was evident on Friday here. So you can see banks up, material stocks up, retail up. The Russell 2000 has been outperforming the S&P 500 since the close on Thursday. There's another very good sign. Remember, the markets was very, very oversold, but particularly small cap stocks and certain other sectors of the market, like the cyclical group. It's also nice to see the universe of consumer names doing a little bit better today. I think Pepsi was a big help. They were talking about weight loss drugs not having that much of an impact on their business. That was a relief. They got clobbered last week. Coke, Kimberly-Clark, Kroger, Villanova, all to the upside here. I just want to show you the S&P in the last 3 days because it's very important to know Friday, what looked like headline bad news, market starts down, ends up on the perception, of course, that wage growth is moderating. Of course, Monday, market starts down on the perception Israeli invasion of Israel. Bad news for the market and ends on the upside. Some Fed officials talking about Fed. Maybe this is the time to sort of stop. And overall, starting down, ending on the upside. So we're up, as you see here, this is about 3% move of the S&P 500 from 42.30 to about 43.65. So what's been moving the market, of course, is the hope, the belief that maybe interest rates are going to start moderating and moving to the downside. Oil dropping, and finally we're getting into earnings season. We've been talking a lot about this. Mike and I have been talking a lot about it. Earnings expectations are stable to improving. The trend in earnings, that's what matters. Not that we're flat year over year. The trend, flat to slightly up. That's always the most important thing for earnings overall here. Just take a look here. This is 1 year since the low. We were talking about this earlier here, and here's the numbers here. It's this week. It was the 12th of October. S&P 500 up 22%. But you see the equal weight S&P up.
Ladies and gentlemen, man, was we right on the long.
Earnings expectations are much higher. There's the average equity ETF. I just threw this into this comparison, only up 11%, and there are hundreds of equity ETFs, so much more than just the 11 sectors of the S&P. So there you see sort of the uneven distribution of the returns. Here's the one interesting thing that I find. You want to really know where the money is going. This is the 1 year since the bottom. This is the flows into flows, essentially. Equity ETFs, $300 billion in inflows. Fixed income, $203 billion. Almost all of that is short-term money, 1 year treasuries and things like that. But look at the money market funds, Michael Leslie. $1.1 trillion. Now, that is eye-popping. There's now $6 trillion in money market funds that are out there. This is a 20% move. Is that a little, a lot? It's the largest ever in history since they've been tracking money market funds in terms of move. So the question is,
I don't know if she'll marry you. You could try
to get that sticky money out of there, and the answer seems to be a drop in rates somehow to move that money. That's all money that's competing with the stock market right now. That's the most interesting thing that I've seen along.
It's definitely competing, although on the other hand, it really accelerated when you had the regional bank stress in the spring. So it seems almost like the money market assets would otherwise perhaps be in bank deposits as opposed to every dollar of it is earmarked to flow into stocks once the coast is clear.
That's true. My mother, who I made fun of relentlessly in March and April, called me in the middle of March saying, I'm pulling money out because I got 0.3% in my bank account, and now I got 4.5%. The bank teller friends that she has, she was calling from the bank. Robert, I'm pulling money right out now. And she called me last week and said, should I put more in? But it's still, the point is, it is a substantial competition for stocks. There are many, I got many emails and viewers stopping me on the street saying, I'm very happy with my 5% here and a 2% real return. That's not a bad, the risk reward ratio, the equity risk premium is so low now that everybody seems to be saying, why am I taking this risk right now?
Sure, if you're comfortable with it, if you can watch the market go up without you, that's perfectly fine, right? But as you said, we're up 3% in 4 days. You're up 10% over the year. If you're good with that, then sleep well.
The biggest risk I see right now is it's going to be hard to argue for some big multiple expansion in the S&P. It's going to have to come from earnings. It's encouraging earnings flat to moving up slightly in the last few months for the third and the fourth quarter. That's important, but it's not Titanic. We're going to have some pretty optimistic commentary to move the earnings up dramatically. And if there's no expansion of the multiple, it's all on the earnings. That's a lot of weight on earnings expectations. That's for sure.
Bob, thank you. Let's talk more about yields. The 2-year rebounding after reaching its lowest level since September 8th, or the 2-year bond rebounding.
Yeah,
10-year hitting its lowest level since October 2nd. Our next guest says that yields are near a peak for the cycle. Let's bring in Charles Schwab's chief fixed income strategist, Kathy Jones. Kathy, thank you.
Hey man, now you know for next time. Now you know for next time. It's all good.
How long is this cycle, and where do you see yields going from here?
Well, yeah, great question on the cycle, because this has been a prolonged, long cycle. I think we all were sort of expecting a rapid up and down, and what we've gotten is sort of this drawn out cycle because of the Fed's higher for longer. So the cycle will probably extend into next year, but we do think that at some point in second or third quarter of next year, we'll probably see the Fed pivot towards easing rates, because as they've all been talking about the last day or so, it looks like rates have gone high enough to slow the economy and continue to bring inflation down.
You've got Dallas Fed President Lori Logan saying yesterday, sharp rise in long-term rates in October basically may mean that there's less of a need to further hike from here. Do you agree that the market is adjusting enough so that the Fed doesn't have to? And if we've already seen the peak, will it still do enough in terms of financial tightening that allows for the market to basically say, mission accomplished on this hawkish posture?
Well, I think so. And I think that that's the calculation that Dallas Fed President Logan is making. And she's been one of the more hawkish members. So her shift, even if it's a modest shift, is pretty significant. So what she's been referring to is this term premium, this risk premium that's in the market for the uncertainty about the direction of rates and how that's gone up. And when that goes up, it does a lot of the Fed's work for it. And, yeah, we have seen inflation is trending down. If you look at the core PCE over the last 3 to 4 months, it's already almost at the Fed's 2% inflation target. It's about 2.2 on a 3-month annualized basis. If you look at tightening lending standards at the banks, I think that's definitely been a factor that is affecting companies. It's affecting individuals. We're seeing, financing costs for everything from cars to plant equipment, et cetera, starting to go up, and then tightens up
Nice.
credit in the
Good
economy.
stuff.
And all that should slow things down. It should result in inflation continuing to trend lower. It's going to be a bumpy ride, but I think the Fed has done enough. And remember, they're still doing QT in the background. So just because they stop hiking rates doesn't mean that we won't see more tightening in the pipeline. That's going to happen through quantitative tightening and by keeping real rates high.
Yeah, Kathy, you mentioned the term premium discussion, and it's part of what I call, we're at this phase of the cycle where it's all about the abstractions or these inferred statistical values in there, where the neutral rate, potential GDP growth, all these things you have to make assumptions about and model out. When you bottom line it for a bond investor, what does it mean? Is there now value in parts of fixed income that there wasn't before because you have some kind of yield over and above what the presumed inflation rate say?
Yeah, absolutely, Mike. That's exactly the point. So a couple of things for bond investors. You have real rates. So when we look at the TIPS market and the implied inflation rate, you get 2 to 2.5% almost in terms of real yield there. That we haven't had that since pre-financial crisis days. So you've got some cushion there if the outcome isn't what was anticipated. But you've also got coupon income, and this is hugely important when you're a bond investor. Coupon income is really what you're investing in fixed income for, and that really gives you a lot of cushion on the downside because your total return return is that income component plus or minus the price change. And the price can go down, maybe if yields go back up, but you've got a lot of coupon income built in. So if you're an investor in fixed income and you're looking for income, you're not only getting it in nominal terms, you're getting it in real terms. And that should mean that going forward, the risk reward is much more attractive than it has been for several years.
Fascinating. Kathy, thank you.
Thank you.
Meantime, day 5 of former crypto king Sam Bankman-Fried's trial in New York City court. Star witness Caroline Ellison, Bankman-Fried's former friend and former CEO of hedge fund Alameda Research, is due to take the stand today. Kate Rooney joins us with the latest this morning. Morning, Kate.
Who took the longs? Who took the longs?
Sam Bankman-Fried's inner circle. At one point, his girlfriend as well. She arrived at the side door of the courthouse about 9:45 this morning, hiding under a blue baseball cap. She was flanked by escorts. Ellison was the CEO of the hedge fund Alameda, which Bankman-Fried owned 90% of, and she was one of his roommates in the now infamous Bahamas penthouse. SBF, as he is also known, is accused of using that hedge fund to siphon $8 billion in customer money from his cryptocurrency exchange. He has pleaded not guilty to 7 counts of fraud and conspiracy, but Ellison has pleaded guilty to similar charges. She has not spoken, guys, publicly beyond her plea agreement when she admitted to knowingly misleading investors. Bankman-Fried leaked her diaries to the media this summer, which resulted in his bail being revoked for witness tampering and put him in jail ahead of this trial. In opening statements, the defense team really tried to shift the blame to Ellison, saying that SBF gave her sole responsibility of that fund, also said that she didn't hedge appropriately. Gary Wang, meanwhile, the co-founder of FTX, also pleaded guilty. He is on the stand as we speak. He said SBF knew about customer money being taken and spent illegally. Back to you guys.
Kate will be in touch all day. Kate Rooney joining us talking about the trial there. Coming up after the break, Squawk on the Street goes to the Global Gaming Expo in Vegas with the CEO of MGM Resorts International, Bill Hornbuckle. A lot to talk about, from last month's cyber attack to labor strikes, as the stock is trying to bounce to a 3-week high. Stay with us.
Okay, rejected. Song that was created during FMOC. About time. That wick, I'm gonna have to go to a 4-hour time frame, but it is possible for it to fill that wick, but based off of this 4-hour time frame, we would need to see price get above 350. If price can get above 350, then yes, we could push higher. Well, I do know that we are going to end up pushing higher. It's just a matter of patience and waiting. But yeah, but over here at 350, we should see some sort of rejection, and RSI stochastic have reached overbought territory on a 4-hour time frame. And if they pin the market up here, we could see a pretty substantial retracement for CPI on Thursday. So for me, I'm done for the day. No more trades for me for the day. Nice run up. So if you guys have any questions, feel free, let me know. Got about 15 minutes left before I jump off stream, but essentially, as I told all of you guys today, markets for me was a buy. I was long biased. Things are playing out. Tesla, Nvidia. I mean, let's look at Tesla. Tesla, look at this. If RM, if you're still holding, if you are still holding the 255 calls expiration this Friday, you are banking. Matter of fact, bro, tell me something. What's up? What's up? How's it looking? Did you take the trade? This is what I want to know. All right. Did you take Nope, I got out this morning. All right, all right. Hey, still good, still good. So what's up? What are we looking on the P&L? Can I get some P&Ls this morning? It's not about me, it's about you guys. Do I trade options? Yes, I trade options as well. Got some private messages. Let's see. Yep, was happy with the trade. Awesome.
This entire process, but this is behind us. Hopefully it's a one-time incident. Let's see. Something quickly.
Yes, I trade options. I trade equities. I don't only just trade futures. I've been doing this for 10 years. So I started in equities, penny stocks, listed stocks, then options, and then futures, commodities, forex, crypto. So there's really nothing under the sun that I can't trade as long as I understand the movement, position sizing, and what may cause it to move in one direction or the other. So yeah, I do trade options, as you guys can see. This is not just futures trading room, because I can do everything that everyone else on the other streams do, from shorting, longing, to again options, puts, calls, swing trade, day trade, hyper scalp, you name it. Banked 2K on the trade. Awesome, bro. Awesome. Awesome. Happy to hear that. Very happy to hear that.
In Nevada, we're seeing a big influx of convention business. That's up more than 60% last month over last year. So yes, business is booming here. You can tell it. But now you have this threatened strike with the culinary union. Where do things stand with the union, and when does that get resolved?
We're in constant dialogue with them. I'm in dialogue with them. I know the other CEOs are engaged, so we're engaged at the highest level. We haven't had a citywide strike in 39 years. I'd like to think it's in everyone's best interest, our employees, our stakeholders, ourselves, to continue to go forward, continue to discuss. We will get through this. And so it's critical time. I think the next 2 or 3 weeks, hopefully something of substance happens. And we'll get through this like we always have gotten through this. And if you want to look at resiliency, just look at what our company just went through. We're prepared to take anything this brings. But I think we will all prevail.
Just
and I think
beautiful.
ultimately common sense will prevail here.
The interesting thing, though, is among the demands that the culinary union has is the way rooms get cleaned. They're tackling
Do I do one-on-ones? Yes, I do.
that happened in the pandemic that improves the bottom line, improves the margins for companies like yours. They don't
Just shoot me an email at Rigonometry Trading, and we can set up a Zoom, and where I'll ask some questions to see if I'm a good fit for you, and then we can talk schedule and pricing. Okay. All right.
That's not going to change. Whether we take a view on one less credit or not, time to tell, and at what property level, whether it's luxury or some of our legacy brands, we'll make that decision ultimately over the next couple of weeks. Obviously, it will have some impact, but remember where we were versus where we are. It's a substantive difference.
When we're looking at the digital business for MGM, you're partners with Entain, a European company in BetMGM. It's clear that this is 2 different companies, 2 different masters, 2 different parents trying to raise the same baby, but maybe very different approach. You're very bricks and mortar and entertainment, rewards points. They're very tech and it operates on their side. How long can this last? We know that omni-channel works. How long can it last that you operate separately?
Look, I think it's a great marriage, just by defining what you just said, what things we bring to the table versus the things that Entain bring to the table. They bring a tech stack, they bring know-how and knowledge. We bring all the intrinsic things that you mentioned.
My availabilities depend.
It's now got the single wallet, which is a big single wallet, which is a big deal. We're about to get Entain
And yes, I do have limited time that I offer for one-on-one.
As well as come back and enjoy what we offer. And so we do like the merit.
Just shoot me an email, and like I said, we'll set up a Zoom, and I can ask you some questions and see if I'm a good fit for you. I don't just take on anyone. I don't really advertise it, but yes, I do one-on-one sessions, mentorship actually. And I'm pretty sure you can see by the calls it would be worth it. Don't take my word for it. You can ask a few people in here. Pull back for the London close. Nvidia. Getting close, getting close. Let's see how much higher does Tesla have to go? 273, 273. So gonna set up a level and alert on Tesla. From this move, Tesla could easily head up to 273. So I'm going to create an alert at 270 at or above. Voila, bang. Retracement where I could like to buy. Set past 268, then it's a retracement that I would like to see on Tesla for a potential relong would be 262, 263. Damn. Need some water.
It was up about the same amount yesterday. Of course, Friday also up 1.2%. So stringing together 3 days, about 3.5% off those lows from last week as Treasury gets a block down. Obviously, the cash Treasury market was closed for the holiday, but we did see basically the ETFs and the futures traded. We are seeing a lot of relief on the yield side. Of course, also oil. Just a one-day pop is also in retreat a little bit modestly and sort of at levels that are not that scary given where we were too recently. So it seems that the market is settling into this zone of effectively saying, you know, yields have been the big challenge for weeks and weeks here. That's coming off the boil. At the same time, the seasonal and oversold effects in the market seem like they're moving in close favor. We'll see how far it gets us. All right, Nike shares have been an underperformer this year. The brand, though, remains remains strong as ever with teens.
Taking a long position on Euro USD.
Nike, the top brand for teens in both apparel and footwear for 12 years running. This is according to Piper Sandler's biannual teen survey. Converse holds on to the second favorite shoe brand. Adidas held third. New Balance gained in share, moving into fourth, surpassing Vans. American Eagle and Lululemon again second and third most preferred clothing brands. Shein moved up to number 4.
All right, we got about 7 minutes left. Do you guys have any questions for me?
1% less than last year. 4% less.
If no questions, I'm pleased to see that a lot of you guys are profitable on the day. Again, any questions, comments, or concerns, DM me or shoot me an email at rigonometrytrading@gmail.com. Other than that, it was a nice, smooth morning. Start off a little choppy, but the longs played out. Now I'll probably check back in later on the day, see if maybe we get a decent retracement to continue to the upside.
Dominates online, 59% share. Shein comes up second, but with just 7% share. By the way, speaking of Amazon, today is the beginning of its second Prime Day deal event this year. While still expected to be a large shopping event, data from Amazon suggests that shopper interest and engagement has waned over time for these Prime events. And a CNBC analysis of Jungle Scout pricing data over the past year on a basket of products sold by Amazon directly or the brands themselves on the platform found that the best price for electronics and toys is typically during Amazon's summer Prime sale. For health and beauty, might want to wait to buy that during Black Friday, but for home goods, this is the Prime event that might be your best price. Captify also telling CNBC the top 3 search categories so far this morning for Amazon, in fact, are electronics, home and kitchen, and toys and games. Back over to you guys.
Court, I just wonder how sustainable that increase in beauty spending might look at this point. Does this repeat a trend from prior years, or is this a kind of a big substitution effect of beauty products for things like clothes and shoes?
Yeah, that's a really good question. So we are seeing the highest level in cosmetic spending since 2019. So we've seen a higher level in the past, dropped off for a while during the pandemic. I guess we didn't have as many places to go, and the same thing went for teens, and then sort of jumped back up. It's hard to say how long this trend will last, but Mike, when you
Indeed, man. I gotta start tracking the win streaks, cause man, it ain't very often that we have a losing day. At least for myself.
I do find it interesting though that ELF or ELF was the #1 brand. It's really gained a lot of traction. It as a company and a stock has performed fairly well, and it's better price point, which makes sense for a teen consumer, which may have a little less disposable income. Although if you look at their preferences for handbags,
4 minutes till the London close. Come
I'm sure
on.
they can actually afford them, but Gucci, Louis Vuitton, those were way up there.
Wow. Yeah. Court, it's interesting. We were talking earlier in the hour about the Birkenstock IPO and just kind of this revival of brands that were popular 10, 20 years ago in the 90s. Are you seeing that also in the survey? Just the brands that were popular maybe at the turn of the century that are suddenly having a new life these days?
Awesome. Make sure you keep it that way, man. Keep it that way.
Surveys in the spring again here, sort of right now with the baggy pants are really popular again. But Birkenstocks actually did not make it into the top 10 for hottest shoes, which I was fairly surprised about. This teen survey does often get an early read on some of these things. I think you might remember several years ago, maybe now, the LL Bean boot kind of resurfaced in popularity, and I really saw it first pop up on this survey. Not the case though right now with Birkenstocks, at least not for the teens in the fall.
Yeah, I can't keep up with it though. I mean, it's like skinny jeans, not skinny jeans. I don't know.
I don't know. I look all
Facts.
I'm sure I'm well defined.
Facts.
Thanks, Court. One more thing before we go. This is wonderful news. A huge congratulations to our Seema Modi and her husband Jeffrey on the birth of their daughter, Shauna. She was born 7 pounds, 15 ounces. Look at that cute little face. Her name is a tribute.
All right, ladies and gentlemen, thank you again. It was a pleasure. I appreciate all of you guys joining. I appreciate everyone on YouTube joining and checking out the stream. Longs played out beautifully. And again, for the so my plan for the remaining of the day is I'm gonna set up some alerts, and watch for potential pullbacks. But it's come to a point where now I can go have some breakfast and then hit the gym, run some errands, and I'll try to check. I'm gonna check the chart at 2:30. I'm gonna see about a way to maybe set up like a free Telegram. That way, when I'm mobile and I'm taking trades, you guys will still be able to get alerts. So let me know if that's something that you guys would be interested in, because even in the afternoon or in the evenings when I'm not streaming, I'm still trading. So what I could do is set up like a free Telegram where you guys will be able to get notifications on your phone, like, oh, I just took a trade here. I'll be able to post the charts and explain why I'm taking those trades, and then you guys will be able to take advantage of that. So let me know if that's something that you guys would be interested in. And yes, I will even post it for on the YouTube as well. So yeah, so I just want to be able to continue to provide really good value and trading opportunities that you guys may take. Granted, I know a lot of people don't do this full time, so it's very hard to keep up with the every day-to-day and all the various details and things and newses that may, cause the market to move in one direction or the other. And for those of you guys that have been with me since the beginning of the year, you guys know that not only am I paying attention to trades, but I'm paying attention to what's going on in Europe, what's going on in Asia, pretty much what's going on around the globe, and finding opportunities and knowing based off of certain situations what type of trades I'm going to take. And as you guys saw over the weekend, those that followed me on IG saw that I was mentioning that the market was going to gap down over 200 points, and that was specifically the Dow Jones. And then I started scaling into a long position on ES. And you guys know my favorite plays, some of my textbook plays are gap fills, right? Yes, we have gaps on stocks, but stocks don't fill the gaps as quick as the futures and commodities sector does. So probably by the end of the week I'll do that, just so that way when I'm overseas, since I won't be streaming while I'm overseas, I'll be able to still share alerts and trades via the free Telegram, to where you guys will be able to still reap those benefits. So if you guys are interested, I'll post a link in here once I create it. But if you guys don't end up catching it, just shoot me an email. You're welcome, buddy. Same here. So guys, enjoy the rest of your day as well. Thank you again for joining. I'll see you guys tomorrow, 9 a.m. sharp, okay? I hop on every morning at 9 a.m. sharp. Awesome. Peace out.